wabarakatuh to our dearest lecturer Ustazah Nurul Hasanah binti Tamili and our fellow classmates. Today we are from Group 3 consists of Ahmad Daniel, Muhammad Ashraf, Nur AMIRA WAHIDA, Nur Hidayah and Nur Ideeza Aina will be present about application of Murabahah in Rhb Islamic Bank Berhad. Here is the contents of this presentation. We have introduction, objective, concept of Murabahah, Murabahah in Rhb Islamic Bank including the background, products, modus operandi of the products and the comparison of the products, and lastly recommendations and conclusion.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Hidayah binti Muhammad TARMIZI. My matric number is 2022908117. Here, my group and I will present about the application of Murabahah in Rhb Islamic Bank. So, Murabahah is the cost price of the goods plus the margin profit. It happens when the seller and also the buyer agree to the cost and markup of an asset. This contract also cannot be terminated without mutual consent of all parties. Other than that, Murabahah usually used in Islamic banking system, especially for customers financing. For example, Maybank Islamic, Bank Islam Malaysia Berhad, CIMB Bank and also Rhb Islamic Bank that will be discussed later. Then, Murabahah also can be called as a trust sale because the customers will put their trust in the bank so they can manage the commodity at a reasonable price from the supplier to make sure the customer can pay for it. Last but not least, in this video, we will discuss about the types of Murabahah products in Rhb Islamic Bank, which are the first one is Commodity Murabahah Deposit I, the second one is Commodity Murabahah My First Home Financing I, the third one is Murabahah Term Financing I, the fourth one is Murabahah Negotiable Certificates of Deposit I, and the last one is Commodity Murabahah Revolving Credit Facility I. So, end of this discussion, the product that have the most benefit will be identified.
Hi, Assalamualaikum. My name is Nur AMIRA WAHIDA binti NASHARUDDIN. Number matric 2022970839. So today I want to present about the definition of Murabahah. Murabahah literally translates to capital gain or profit gain from the Arabic word arid, while technically it's a form of sale in which the seller discloses both the cost of the commodity and the profit margin. The seller openly indicates to the buyer how much he has spent and how much profit he intends to make as the major distinguishing feature of the deal. As this definition demonstrates, Murabahah is not an interest-bearing loan. If it acts as both a trader and a financier in Islamic financial transactions under a Murabahah contract, if is guaranteed to buy specified assets from vendors or suppliers based on customer specification, then sell such assets to customers with full transparency of assets, acquisition cost and profit margins as traders. The IFI will often grant a deferral settlement term on the sale price agreed upon by the customers under Murabahah contracts to simplify financing arrangement. Next, the legality of Murabahah. According to Sharia, in order for a sale and purchase to be permissible, the subject of the sale and purchase must first be in profound existence at the time of the deals. This criteria, however, is not required in istisna and contract salam. Ulama have agreed that it is prohibited under Sharia for a person to sell items that do not exist or that he or she does not own, or to complete a sale first and then go to market to buy goods for future delivery to clients. Second, the object for sale must be in usable condition. Illegal products such as liquor and meat are prohibited from being sold. The subject matter must also be quantifiable in terms of the quality and quantity of natural resources. When determining the type and quality of the topic, the seller should inform the consumer of any available disabilities. Furthermore, the seller is liable for telling the buyer if there is a fault in the contract subject matter that is not visible to the human eye. The other party has the right to terminate the contract if you fail to do. Thirdly, the seller must be the owner of the item being sold. Fourth, the parties must be informed of the sale price, mode of payment and payment deadline. Failure to do so may result in uncertainty and voidability of the contract. The fee can be fixed or computed as a percentage, and it can be paid immediately or later in most cases. The issue of legal capacity has strong evidence in the Quran Surah and An-Nisa verse 5, and do not leave your wealth which Allah has made as a source of life for those who are not of sound mind. Give them provisions and clothing, and speak to them kind words. In the above verse, God demonstrates show to handle and deal with property or belongings belonging to minors and individuals who lack common sense. The purpose of this directive is to safeguard the interests of this group of persons, and it is closely tied to the rationale for legal capacity in contractual arrangements.
Assalamualaikum warahmatullahi wabarakatuh. My name is DANIAL bin HAMIDON. I am from IC21031 and my student ID is 2022 787 210201. And today I will be one of the presenters for Group 3 for the application of Murabahah in RHB Bank Berhad. Moving on to 3.3, the pillars and conditions of Murabahah. So according to Jumhur Ulama, or the majority of scholars, there are 4 pillars of Murabahah. The first one is Sirah, which consists of ijab and qabul, the giving and the acceptance. So this is the symbol of mutual consent from both parties, the seller and the buyer. And the second pillar is subject matter, or known as ma'qud alaih in Arabic. So the subject matter must be exist, beneficial, valuable and others. And the third pillar is seller, or known as mushtari in Arabic. So seller is an individual who exchange their goods and services in return for payment. And the fourth and the last one, the last pillar is buyer, or known as buy. So buyer is an individual who exchange goods, who exchange money for goods and services for their own preferences. So the next one is conditions of Murabahah. So the first condition is that the seller must be fully own the commodity before selling the commodity to the buyer. And the second condition is that there is a clear information regarding to the amount of capital or the cost price. And the third condition is that there is clear information about the profit taking. Now this is the most crucial part in the condition of Murabahah, because as we know, Murabahah is also known as by al-amanah. It is based on trustworthiness. So the seller have to disclose how much profit is he taking, whether it is in form of nominal or percentage, both can. And the last condition is the original purchase contract between the seller and the first buyer must be valid. So let's start to know the background of RHB Islamic Bank Berhad. So RHB Bank Berhad, or known as Rashid Hussein Bank, RHB Banking Group is a multinational regional financial services provider, ranked among the top banks in Malaysia and also in 9 ASEAN countries, including Thailand, Indonesia, Brunei, and more. And RHB Bank, I can say RHB Bank is the oldest and first local bank that appears in Malaysia, since it merged with 3 different banks, which are Kuong Yik Bank, Sime Bank Berhad, Bank Utama Malaysia in 1997, 1999, and also 2003. And RHB Bank provides diversified banking and finance business such as RHB Bank Berhad, RHB Islamic Bank, RHB Investment Bank, and more.
Now, I will present about the first product of RHB Islamic Bank, which is Commodity Murabahah Deposit I. This product applies a Sharia-compliant contract, where the Sharia-compliant commodity will be as the main asset of the financing. I can say that this product is secure because it is under the protection of PIDM, which stands for Perbadanan Insurance Deposit Malaysia. Then, this product also can be classified as the term of investment because the customer will appoint the bank as an agent to manage the commodities using commodity murabahah and tawarruk contract, so they can gain profits from the sales. In this product, the customer can make the minimum of deposit, which is 1,000 ringgit, whether in a short, medium, or long investment. And the payment of the profits will be given to the customers by monthly, quarterly, semi-annually, annually, and upon maturity. There is also no fees in this product. Even if there are any fees later, the bank will acknowledge the customer first. For example, there is a campaign of Commodity Murabahah Deposit I that called as RHB 9 Months CMDI Promotion 2022. This campaign is held only for the RHB users, so anyone who wants to join this campaign need to register in RHB Islamic Bank first, because the main platform that will be used in this campaign is RHB Now Islamic Banking. There are also some benefits of this campaign, such as the customers can make deposits in 6 or 9 months. They will gain profit within the selected period of time. For example, the customer that choose 6 months can gain profit by 6 months, while the customer who choose 9 months will gain the profits by 9 months. The customer also cannot make any withdrawal before the maturity because it will affect the profits as stated in its product disclosure sheets. Next, I will talk about the modus operandi of Commodity Murabahah Deposit I. As you can see from the figure, the customer will appoint RHB Islamic Bank as an agent to start a deposit of CMDI. The started amount is 10,000 ringgit. Also, that amount will be used to gain profit. Then, the bank will offer the customer to pay the commodity at a deferred payment, and at the same time, the bank also purchase the commodity at a reasonable price from broker A. Next, the bank will resell the commodity to broker B, so they will gain cash immediately. It is because the money gained from the broker B will be as the capital to make an investment later. In the end, the customer will gain the profit of the markup price from the bank upon maturity, and the customer also needs to pay at a deferred payment to the bank for 12,000 ringgit, which it consists of the total cost and profit, which are 10,000 ringgit and 2,000 ringgit. I also want to acknowledge people that the commodities are traded in the closed market by RHB Islamic Bank. So, both broker A and broker B are in the same company, even if they are not in the same department. Actually, it will benefit the bank and also the customer to generate money using a Sharia-compliant contract.
Hi and Assalamualaikum warahmatullahi wabarakatuh to my dear lecturers, Ustazah Hasana binti Tamili, and my fellow friends. My name is Ideeza binti JUNAIDI, and now I'm going to continue presentation regarding the Murabahah product in Rhb Islamic Bank Berhad. So the product that I choose is Commodity Murabahah, my first home financing I, and actually this product is a home financing scheme which aimed at assisting Malaysians to own their first home as a first-time home buyers. And it is a Sharia-compliant home financing scheme because they apply some of the Sharia contracts such as Wakalah, Tawarruk, and Murabahah. And this product offers up to 100% finance for a first home, which worth up to around 500,000 depending on the package chosen. So this product offers 3 packages such as standard package, general package and step up package. So the applicants can choose this package depending on their budget and their preferences. So the table here shows the financing plan details for the package in this product. So as you can see, there are maximum monthly gross household income, purchase price, margin of financing, and the financing tenure. Okay, so the applicants can read it before they choose the package. Now let's move on to the eligibility for this product. So eligibility is a condition that the applicants needs to follow in order to able to be approved for this product. The first eligibility is the applicant must a Malaysian citizen. Okay, because the purpose of the product is want to help the Malaysian citizen in getting their first home as a first-time home buyers. Any applicants who have an experience or have bought the house before, they can't apply for this product. And it opens for a private sector or public sector. And joint account is allowed because some of home financing scheme they only allow for one account. This home financing scheme they allow for a joint account. So this is very beneficial for the applicants, okay, especially for the married couple. Okay, they want to have their first home, so they can apply for this scheme by have a joint account. Lastly, for the salary earners for per applicants, the maximum gross income of household is does not exceed RM500,000. So the applicants who have monthly income per month who have exceed RM5,000, they can apply for this scheme because they want to the Malaysian citizens to buy their first home which have a salary per month below than 500,000 and below. Next, let's move on to the modus operandi of this product. So this product use a commodity murabahah atau tawarruk. So they will have three parties in this procedure. So the first is the bank will purchase the commodity from the commodity supplier. They will act as agent or known as wakil to carry out the arrangement of commodity on the customer's behalf. And then the bank will sell the commodity to the customer. Okay, to the customer with a markup price. So here they will include the Murabahah principle. Okay, and then the customer will pay back with a deferred payment throughout the financing period. Okay, then the bank will sell the commodity to the commodity broker. Okay, they will act as customer's agent. Okay, and then the commodity broker will make a cash settlement to the bank, and then the bank will give the revenue, some revenue to the customer because they want to buy the house, right? Lastly, the customer will make a payment to the bank until the payment is settled. So they will make a payment with a deferred payment by monthly because the total payment have include the Murabahah principle, have include the profit. So based on this commodity Murabahah contracts, it shows that the purpose of tawarruk contract is to get cash. As for this home financing, the bank will be managed as the agent of purchasing the commodity at first, but then the bank will sell back the commodity to the customer with a Murabahah principle, which the customer will pay the commodity purchase with total of purchase price plus cost profit to the bank with a deferred payment.
Next is Murabahah Term Financing I. Murabahah Term Financing I is basically a Murabahah financing facility which exists in medium to long term. It is used for the acquisition of property or assets. This includes assets like construction or manufacturing assets, raw materials, stocks, inventories, and much more. And to apply this product, this financing product, a collateral must be placed using term deposit or landed property or any other fixed assets that can be used as a collateral. And the margin of financing will cover up to 90% with the minimum rate of 200,000 ringgit. And the profit rate is calculated with the summation of IBR with the addition of spread. IBR, or known as Islamic base rate. And other things that we need to know is that the fees and charges that needed to be paid are stamp duty, disbursement fees, legal fees on financing documentations, and also processing fee. So that's all that we need to know on Murabahah Term Financing I. The modus operandi of Murabahah Term Financing I. To me, the modus operandi for Murabahah Term Financing I is quite simple and straightforward. It only involves 4 important steps to be looked into. So, to start, the first step is that the client will go to see the supplier and identify what kind of commodity that the client needed to buy. Okay, so the second step is that the client will approach Rhb Islamic Bank to make a request and to make a contract to buy the commodity. And the third step is that the Rhb Islamic Bank will approach the supplier of commodity to buy the commodity on cash basis. Okay, and last but not least, the fourth step is that when the Rhb Islamic Bank has fully owned the commodity, so later on Rhb Islamic Bank can sell it to the client on with Murabahah contract, cost plus profit price on deferred payment. Okay, so I think that is all for modus operandi of Murabahah term financing.
Jadi semuanya, Assalamualaikum. Hi, my name is KARIM. I'm from IC21031 and my matric number is 2022-772-147. Okay, for my part, I'm going to explain a little bit about the product of Murabahah that we have studied in HB Bank. Okay, for my part, the Murabahah product that I studied is named as Murabahah Negotiable Certificate of Deposit, or we call it as NCDI. Okay. Firstly, we have to know what is a negotiable instrument. Negotiable instrument is a document that guarantees the payment of a certain amount of money either on a request or at a specified time. Okay. For this case, which is it is a Murabahah product in the form of a document certifying the responsibility to answer the amount of money that recorded to its holder. Okay. Other than that, it is also an Islamic negotiable instrument (INI) with a maturity to be determined within the months or years from the date of the issue. Okay, the Sharia contract that been applied to this product is commodity Murabahah via tower arrangement. Okay. In addition, for this product, the customer will receive the repayments with the total of the selling price, which is the principal plus profit, if the customer claim it at the maturity date. Okay, but if the customer claim it early, the early redemption may result in a loss to a portion of the principal amount. Okay. In addition, this product also not covered by Perbadanan Insurance Deposit Measure, or we call as PIDM. Okay. The benefit that customer can get from this product is, firstly, it is a product that has a liquid instrument and tradable in secondary market, under which the transfer of ownership is via the certificate, as being mentioned before. The second one is that it has a potential to earn higher return than normal term deposit. Okay. Why? Because this product include Murabahah, which has a markup cost, where the customer receive the payment within the selling price. Okay. And the last one, it have a flexibility for the customer to manage their investment. Okay, that's all from me. I give this to the next presenter. Okay, for the next part, I'm going to explain a little bit about the modus operandi of Murabahah Negotiable Certificate of Deposit. Okay, for the first step, the investor or the customer will deposit a certain amount of money into its Islamic financial institution that issues the MNCDI. Okay, for this case, the Rhb Bank itself. The second step is that the financial institution will buy the Islamic negotiable instrument at the purchase price or at the normal price. Okay. Then after that, the third step, the supplier will then deliver the INI set to the financial institution. Okay. After that, the financial institution, for the fourth step, will sell the INI asset at total selling price, including the principal plus profit to the buyers. Okay. After that, the fifth step, the buyers will then pay the INI asset at total selling price, which including the principal plus profit in deferred payment style. Okay. And for the last step, the customer will then receive the total sale price, including the principal plus profit from the financial institution, which if the asset is held to the maturity date. But if it is claimed early or removed early, it will likely to incur loss because the buyer didn't pay full enough within the total selling price that involved the principal plus profit. Okay. So then the financial institution will pay the payment to customer within the market price of the INI asset. Okay, I think that's all for the modus operandi of MNCDI. Then I will give to the next presenter.
The commodity of Murabahah Revolving Credit Facility CMRCI is a short-term financing facility that offers cash to enterprise for the acquisition of an asset, property or any other suitable assets, as well as funding for working capital and liquidity for the company's day-to-day operations. Collateral can include term deposits, real estates and other fixed assets. Payment for CMRCI will be made in full on the maturity date. The Sharia notion used for these goods is commodity. The tawarruk arrangement, which refers to the buying and selling of commodities that serve as the transaction's underlying assets, is used to attend Murabahah. The consumer will pay the sale price for the commodity, which includes cost and profit pricings on a deferred basis. The product has a minimum financing amount of RM50,000 every disbursement, which is one of the benefits that may be received from it. Margin financing is a type of financing that allows you to borrow money at a low interest rate up to a maximum of 100% of the invoice price within the limits and subjects to credit approval. Next, there are two sorts of rate advantage: contracted rate advantage (CPR) and effective rate advantage (EPR). The contract profit rate (CPR) is used to establish the selling price. The rate effective gain will be utilized as a selling rate if it surpasses the CPR. The CPR stands for cost of funds plus pre-profits, while the EPR stands for cost of funds plus pre-profit. The Islamic base rate (IBR) is then used to account for rate fluctuations over time. Then comes calculation. The daily balance is used to determine profit. Assets that can be financed include halal items, stocks and inventory, and raw materials, a form of security assets financed by the bank, corporate and specific guarantees from your company's directors or shareholders, and other assets or securities approved and recognized by the parties bank are all examples of guarantee received. Finally, the guarantor must be a member of the company's management team or then modus operandi of commodity Murabahah Revolving Credit Facility to begin, the bank purchase commodities from broker number 1 for the state financing amount with prompt payment and delivery of the commodities, which is the subject of the Murabahah. The commodities ownership is transferred to the bank, which will be in charge of any commodity ownership issue. The bank and the customer then enter into a Murabahah agreement for immediate commodity delivery and deferred payment with a markup in the form of flat amount or a percentage deferred sale price. After the Murabahah agreement is complete, ownership of the commodity pass to the customer. The customer then sells the commodities to broker number 2 via the bank as messenger on the premise of immediate delivery and payment after getting possession of them. The bank acts as a courier by transmitting the customer's offer of sale to broker number 2. After the sale is complete, the earnings from the sale of the commodities obtained from broker number 2 are credited to the customer's account. Finally, the customer pays the bank for the postponed selling price in accordance with the agreed upon payment plan. Done.
Lastly, comparison of the product. So in this part, I just made a simple comparison where I just mentioned where is the Murabahah principle is implied in the products according to their modus operandi. So the first product is commodity Murabahah deposit I or CMDI. So this is the fixed deposit type, which is an investment instrument in order to help the customer to grow their money. So the Murabahah implied at the last step of the procedure when the bank sell the commodity to the customer with a markup price, and then the customer will pay back to the bank with a deferred payment. So the second product is a commodity Murabahah My First Home Financing Act. So this is the home financing scheme. Murabahah implied here when the bank sells the commodity to the customer with a markup price, cost price plus profit to the customer. Okay, and then the customer will pay back the commodity purchase to the bank with a deferred payment. The first product and the second product is same. So the third product is Murabahah Term Financing Act. So this product is able to help the customer in financing the acquisition of assets, okay, properties or any acceptable asset mile which have identified by the Sharia. So basically this product used by the entrepreneur in getting their store or landed property. By referring to the modus operandi, Murabahah contract imply the last step of the procedure, okay, when the client buy the commodity from the IMFI and the price will be added with a markup price on the selling price. Fourthly is a Murabahah Negotiable Certificate of Deposit I, or also known as MNCDI. So this is a document certifying the responsibility to answer the amount of money recorded to its holder. So the Murabahah contracts imply when the customer receive the selling price amount plus with principal profit if the Islamic negotiable instrument INI held to the maturity. And the last product is Commodity Murabahah Revolving Credit Facility I. So this product is to help provide funds to the company that follow certain criteria and conditions for financing the working capital funds and to provide liquidity for the company's day-to-day operation. The Murabahah will be implied when the profit is added to the cost price, which the commodity will be sold to the third party with a deferred payment. In conclusion, most of the products that I mentioned before, most of them imply the Murabahah contracts at the last step of the procedure of the product. It happens when the bank sell the commodity to the customer with a markup price, and then the customer will pay back to the bank with a deferred payment. Even though most of the product Murabahah is not their main contracts in the products, but still they include the Murabahah principle.
Okay, lastly, we'll look to the recommendation and conclusion. The conclusion that I can make is that Murabahah is a sale on a cost plus basis and is also a form of a trust sale. And the second one is that compared to regular buying and selling that is by Musawamah, Murabahah is more suitable to be processed so that it can be a customer financing product in Islamic banks today. And the third one is that at RHB, mostly after being viewed, the Murabahah product that being introduced involve hybrid contract that involve the merging of two contract or more contract within them. As an example, that have the merging of a contract of Murabahah and Tawaruk, such as for the MNCD. And the recommendation I can make is that before entering into any contract agreement, users need to be aware of the cost of the contract so that exploitation does not occur, because the customer aware of the transaction that being done in the product. And the last one, the bank also need to explain the cost of the contract offer in more details so that it is better understood by the customer, and there will be no misunderstanding happen between the customer and the bank itself. I think that's all from us. If you have any question, you can ask in the question session. I think that's all from us. Thank you. Assalamualaikum.